Very important topic that uh, we need to be aware of is the stock cycles. Okay, stock cycles is very important. So as a trader, when we sit on a profit making stock, which we know that in a matter of months is going to give me 80%, 100%, 203%. So it eventually turns out to be a multi-bagger stock. Now, these kind of stocks, once we are able to trade on it, we should be able to just observe, keep trailing our stop loss in the upward direction, and exit at a certain level with a very handsome profit. Okay. Now, this can be achieved by understanding the stock cycle. And once you start your study in terms of stock cycles, you'll easily start to see or notice these patterns that why certain stocks are rising higher and higher and why certain stocks are going down and down constantly. So all stocks usually have these particular stock cycle. They be in their accumulation phase wherein they are constantly, you know, getting bought by, market participants gradually. Okay. And after this accumulation that goes on for years, okay, sometimes 1 or 2 years, or sometimes 3 or 4 years, after that the stock goes into growth stage. So it start making very rapid moves, okay, like this. Okay. And more strong hands, more and more institutional buyer will also join here, and they'll gain a lot of money over here. Okay. And the third phase of the stock is the distribution phase. Okay. Wherein the stock price will not move much, it will be sideways. So a lot of distribution is happening over here. And unfortunately, these are the levels wherein the more and more retailers will come. There will be a lot of campaigning that will be run around that particular stock. The stock will be always in news. They'll give a very strong guidance, very different things and very crazy things will be happening with the stock. That usually is the distribution level, because when the strong hands are sitting on a very significant amount of stocks or amount of money on a particular stock, they don't want stock to decline very immediately. So this distribution is usually 1/3 of the growth period. Okay. So let's say if growth period goes on for, let's say, 2 years, so it will be 2 years by three, or let's say it goes on for, let's say, 3 years. Okay. So there would be a 1 year of consolidation. This is just a guideline. This time frame can be a month also. The reason is there could be, weakness in the market, and the stock has, run by, let's say, 200 or 300%, and the stock has very limited time, or it is giving very limited time to strong players to exit their positions. So of course what they'll do, they'll create a very strong move here. Okay. There would be a very large volume at the bottom. Okay. It will breach certain resistance level in the price movement. It will come out of this resistance level. This will be the highest point wherein, more and more market participants there would be there. The stock will be constantly on the television, and that is the level wherein, the maximum level of exits will be done by strong players. And maybe a couple of days it will go sideways and eventually start coming out of this range again. It will break this previous support and it will enter into the declining stage. Okay. And this would be the faster than growth and distribution phase. So it will be very fast like this. Okay. And the stock eventually will start consolidating again, and this would be the fourth and final stage of the stock, that is decline stage. And after that it will consolidate again for a couple of years. Okay. And a fresh accumulation will start, and again it will enter into its growth space. So this is the stock cycles, and you can just check few charts. You will be, able to find these stock cycles very easily. So this is one example. This is a very popular stock. This is Reliance. Okay. So if you see here, this is the stage one, the consolidation and accumulation that happened here. You can see that it was sideways. Okay, then when the breakout came, stock went to its stage 2. So if you notice price point here, this is almost I think 116 rupees. From 116 it went till 720. Okay, almost 720. Yeah, and after that the consolidation came in. How we can judge this consolidation is, you can see that this sideways consolidation happens. By the way, this is a monthly chart. Okay, so you can see from 2000 till 2006 stock was in stage 1. From 2006 till 2008, in matter of 2 years, it gave a very strong run, and I think there was this 4 or 5 months wherein the consolidation happened and the stock corrected. So this was the decline stage, and it happened very fast. Okay, after that there was again you can see there was a mild correction, but this is the range. This consolidation went on for almost 2009 till 2017. Okay, so almost 8 years. So the stock took 8 years to be in consolidation. Okay, and you can see now once this breakout came in here in 2017, the stock has entered into its stage 2. Okay, so the stock is now clearly into its stage 2. It has broken its all-time high level that was of 2008. Okay, and after that you can see that the stock has created this up move. Now in the growth stage, what happens is stock rarely, stock only creates 4 or 5 bases. So what is basis? So this is the base one. Now because this is a monthly chart, the base is not clearly visible, but if you change this stock to a weekly mode, you will find these bases clearly. So one easy way to identify the distribution phase is when you see this 4 or 5 bases. Okay, and the size of base will start growing bigger and bigger in higher bases. So this would be the final phase, would be the biggest one, and the most consolidation will happen here, the distribution will happen here, and eventually stock price will start falling. Okay, now depending on sheer nature of the stock, whether the company is fundamentally good, maybe sometimes the decline phase stops somewhere here in the middle, or the stock goes back to its previous level of accumulation phase, and it consolidates and eventually start making up moves. Okay, so very important topic. So when we talk about multi-baggers, okay, that a certain stock gives 400 points or 10, in fact 10 times or 15 times returns in 4 or 5 years only. So that is usually the stage 2 of the stocks. And if you just remember any stock which has run like this, you will clearly find these stock cycles over there.